Hi, it's Ty the Real Estate Guy here with a video that will absolutely change the lives of those who watch and take action. This is the video that every renter needs to watch right now. For those of you out there that don't own a home, you really need to pay attention. It's a well-known fact that most millionaires have become wealthy through purchasing real estate. And these crazy low mortgage rates make this the perfect time to jump in, whether you're looking to buy a home to live in or purchase an investment property. Today, I'm going to show you why these ridiculously low mortgage rates mean it's a great time to buy right now. In this video, I'll show you how these insanely low mortgage rates change your monthly payment, how they affect your buying power, and how much money these lower rates will save you over the life of your loan. The statistics are mind-blowing, so you'll want to watch this video all the way to the end. So, what exactly is a mortgage rate? Your mortgage rate is the amount of interest charged by the company you took out a loan with to buy your home. Last year at this time, rates were sitting around 5%. Because we've been spoiled by a decade of rates in the 4% range, this seems high. But traditionally, 5% is considered a great rate, especially when you figure people were paying up to 18% in the 1980s. That is sick, and not in a good way. I'll talk more about how a rate like that would change your payment later in this video. Before I talk more about mortgage rates, I feel like I should take a moment to tell you how important owning a home is. For a large portion of Americans, home ownership is their primary source of net worth, and it's an important part of the process for accumulating wealth. To get a better understanding of how important home ownership is, when this video is over, watch my video, Top 10 Reasons You Need to Buy a Home. I'll put a link to this video below. Okay, so what are the benefits of these lower mortgage rates? The obvious answer is that you'll have a lower monthly payment when you buy your home. But what are the other options? 1, you can buy a bigger home. 2, you can buy a newer home, maybe even build. 3, you can afford to purchase a home in a more expensive area, moving closer to the city, work, and things of that nature. 4, you can more easily sell your current house and move up to something nicer, because buyers flood the market when rates drop, which means you'll be able to sell your home more quickly. 5, monthly rent may be more expensive than a monthly mortgage payment. That means you now have an awesome opportunity to buy a home and stop paying rent. Or you can just stay in your current home and refinance, which will make it easier for you to purchase investment properties. So, as I said earlier, a year ago rates were sitting at 5%. Currently, rates are sitting around 3.675%. What does that mean for you? This crazy low rate drop means you can now buy a home for about $50,000 more than you could have a year ago. Even with the recent appreciation in homes, this lower rate means it's a much better time to buy a home today than it was a year ago. How cool is that? I guess the early bird doesn't always get the worm. So, let's run a scenario and say you buy a home for $300,000. If you put 20% down, approximately $60,000, your loan amount would be $240,000. If rates were sitting at 5%, your monthly payment, not including taxes and insurance, since those numbers will fluctuate from location to location, would be about $1,290 per month. To buy the same home today, your monthly payment would only be $1,100. This saves you nearly $200 per month. And consider this, if your loan amount was $500,000, your payment would go from $2,685 to $2,295. That's a savings of nearly $400 per month. The monthly savings is awesome, but even bigger, going back to the scenario of buying a home for $300,000, comparing a rate of 5% to today's rate, you'll end up saving $60,000 to $70,000 over the life of a 30-year loan. That is huge, especially when it comes time to retire or buy a new home. Now, just for fun, what if rates were at 18% like they were back in the 80s? What would that do to your payment on a $300,000 home? Are you ready? At 18%, your monthly payment would be, drum roll please. No drum roll, okay. $3,600 per month. Seriously, how were people buying houses back then? Compare that to today's rates where your payment would only be $1,100 per month. That means your payment would be more than 3 times higher. That is just mind-boggling. Sure, home prices have risen sharply in some areas, but once again, how much of that gain do these lower rates just wipe out? As I mentioned earlier, about $50,000. If you've been waiting for the market to crash because you've heard we might be in another recession, you're making a mistake. In 3 of the last 5 recessions, home prices have actually increased. It's true. So, even with a recession, home prices will most likely continue to rise, at least in most parts of the country. Now, there's a few things you should know about mortgage rates before I end this video. Not everyone will qualify for the best rate. There's a lot of factors. Here's a quick list: your credit score, your down payment, your job stability, the location you're buying your home in, and the type of loan you choose. If you feel like you're ready to buy a home, watch my video, Everything You Need to Know Before You Buy a Home. Well, that's it. For more great real estate videos, please hit that little red subscribe button below. Also, you can find me on Instagram at Ty the Real Estate Guy. If you found this information helpful, please give me a thumbs up. And if you know someone that's paying rent or thinking about buying a home, please share this video with them. If you have any questions or comments, I would love to hear from you. Please type your remarks below. Thanks for watching, and once again, please hit that little red subscribe button. That's how I know people really appreciate the work I put into each one of these videos.